Let's just jump right into it. Quick little disclaimer, everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All statements made are my own personal opinions, and all trading and investment decisions are your own and done at your own risk. You guys know who I am. We'll skip right over that one. So, all right, we can get right into your tickers. So where do you guys want to start? Do you want to start with a quick look at, the market, the SPY or something like that? Or do you want to, have you got any tickers that you want to go right into?
Yeah, I'm good starting with SPY. Sure.
Okay, cool. All right, so this is the daily chart of the SPY. If you've been reading the briefings or have been watching the weekend update thing, you know I've been talking about this base on base. So we had a base, and then we started consolidating on top of that base. Well, today we broke down out of that like quite badly, actually. Now, we've got a former gap. If we look way back in time, there's this gap from way back here. Now, technically, that gap had been filled when we were consolidating around in this lower base, but I still had it marked on. It's sort of an important zone, that one. We broke down out of the base today. That's not ideal, but we did find support, right around the 400 level, or actually more like 402, 401 and a half. I'm surprised it came down this far. I kind of thought, okay, fine. We come down out of this base, scare people, and then the following day we can go right back up. Fake people out here, right? I mean, the market loves to fake people out, and I'm still hopeful that that's what's going to happen. Is that everybody's worried about the CPI. Nobody wants to be long. Everybody, thinks that the CPI number is going to come in hot. Inflation is going to be high, and they want to close out of their positions. Now, if tomorrow morning the CPI number comes in, it shows that inflation is slowing, we're probably going to rally like crazy. And we'll gap up and probably gap up somewhere up inside this range, if not near the top of this range here, and then probably go right through it. Could be a really big rally tomorrow if inflation comes in much lighter than expected. If the CPI number comes in hot, it's hotter than expected, then there's probably more downside here, and probably a test of these previous lows. Whether that's down here at the bottom of this box, which is about 385, 386, or this 1 year low here at 380. So we obviously don't want to see that happen. We've had enough of this area down here. We want to see this moving to the upside, but it's really all about that CPI number tomorrow. And the other indices, I'm sure, look the same as this. The NASDAQ. Same sort of deal. You can see I didn't have that base marked out there, but it should be pretty obvious, right? Something like that. We broke down out of the bottom of it, not quite as badly, and you're right into this support at around 300. We're just barely below it, right? So this doesn't look as bad to me as a SPY. I think our tell today was the Russell 2000. So Russell 2000 small caps, because they had been outperforming, right? When everything else is going sideways, chopping in a sideways base, this was actually making an upward sloping channel here. And it broke down out of that channel. When you see a channel like this, you can maybe draw a line. Oops, that's really messy. Something, you draw a line on it that looks something like that. And, clearly we broke out of, we dropped out of that channel. Still kind of within if you were to draw, the box around it like I had done previously, we're still within that, right? So that's good. It hasn't, hasn't broken down far enough to get down into this space. So this gives me a little bit of hope still, but I didn't like that this morning. I had a feeling we were in for a rough day when I saw that the Russell 2000 was leaking quite badly and the other indices were not. So that's my little update on the markets. So do you guys have any? Do you want me to go deeper into this? Do you want me to look at any of the commodities or anything, or do you want to go into some of your tickers?
Hey, Kevin.
Yeah,
Can we take a look at the IWM?
we're looking at that right now.
Oh, shoot. Sorry. I thought you were still on the spies. Sorry, I had to walk away from my computer just now.
No worries.
Okay. Did we go through the cues?
We did.
Okay.
Were you here for the SPY part?
I was here for the spy part, but I had to step away for a second and I
Oh,
just
okay.
got back. Yeah.
You missed the cues.
Yeah. No worries.
Which basically
I
said
just-
similar
yeah.
similar to the SPY, not
Mhm.
quite as bad. That breakdown in the SPY was pretty bad.
Yeah.
I mean, yeah, that was a big move. It just seems overdone to me. It's too much. But obviously there's still fear in the market, right?
Mhm.
So
Yep.
yeah, I mean, it's all about that CPI number in the morning.
Yeah, it's all tomorrow. Let's see what else is there.
So here, let's go back to this. So yeah, if you guys have any tickers you want to see, more than happy to take a look at them.
Let's see.
Nothing.
Usually there'll be a lot, right? Yeah, I'm trying to take a look to see.
Actually, I'm just gonna make some notes for the recording. So I did SPY, QQQ.
We haven't looked at PLBY for in a while, right?
PLBY. All right, sure. Let's take a look at PLBY. I don't think we're going to see anything exciting here.
I feel like it's been going like kind of sideways.
Yeah, it's trying to go sideways, but I mean, it's kind of still sloping down a little bit, right?
A little bit, yeah.
It just can't seem to put a stop to this downtrend. Some people might actually draw that as a descending triangle like that. I'd probably be more inclined to just draw it as a channel like that. But let's go with the descending triangle. That's actually more bullish because you expect to see that break out the top, the top of the descending triangle, and that's the first step for recovery on this, to start picking off all of these resistance levels and these moving averages overhead. It's going to be it's a lot of work for PLBY to start looking good again and get into this range. We'd really like to see it get back up into this 1350 to 16 area. Where it broke down from over here. The sooner we can get back up in there, the more comfortable I'll be. That's almost 100% move just to even get there, right? That's a big move just to get there. Yeah, I think that once we start seeing the end of this bear market, once people start feeling a little more comfortable, this is one of the stocks that people will move back into. One that looks interesting, I noticed. Some people were talking about it in the Discord, was Celsius.
Celsius? Yeah, I saw that too.
I'm not in this one. I've been looking for a place to get in.
Same.
And which has been really hard, right? I mean,
I think Matt initially introduced this stock when it was like $20.
Yeah, he was late. I was trading it, and I think I should pull up my trading log, because I think I was in either here or here.
Wow, below 10?
Oh yeah, yeah.
Oh, wow.
Caught most of this. So when was this? This is like
April 2020?
here, yeah, April 2020. No, wait a minute. And actually, it might have been on this breakout here. Anyway, I'm caught like this move, and then I started going sideways, and I got out.
Uh,
And I think this is where Matthew went in.
I think it got in around $20. Yeah, I remember it was in the 20 range. Yeah.
But I remember mentioning it to him. He didn't, or actually, I don't know if I mentioned it to him or mentioned it in a Discord or something and tagged him on it. And he didn't pay any attention. And then he kind of found it like months later. He found it again on his own. Yeah, I mean, what a stunning move! And I, kicking myself for having got out in here. Right?
Yeah.
I mean, this was a really nice game. Certainly can't complain about that. But there was still lots more to come, right?
I think it peaked at 110, right?
Peaked at 110? Yeah, around 110, 111.
That's insane. Yeah.
Yeah. Pretty crazy. So, to me, this has held up a lot better than a lot of stocks like this. It did come down a lot. I mean, this is a big move to the downside. Off its peak. Well, down to this one, that was down 64%. This one, 65%. That is a big move down. We've seen worse than that, but it's recovered fairly quickly. And so the deal is this going to hold in here, and is it going to break out to the upside? And if this is going to break out to the upside, I think you want to be in it. The question is just, where do you get in? Do you try and get yourself a better price? And do you try and get yourself a better price and go in like at the bottom of this range? Today might have, if that's what you want to do, today would have been a good place to buy, right at the close. But that's super risky with CPI and everything tomorrow. But, tomorrow, if CPI comes in light and the market's rallying, this thing probably gets up above this range. And I think if you want to be in this, you've got to just jump on it. You kind of, hold your nose and jump in. And in a way, hope for the best. I mean, I hate chasing. But, if the market goes, this is going to go, I think. It's a nice setup here. I'd prefer to wait and try and get it as it breaks out of this range here, rather than buy here and hopefully not have to buy a gap up. And we should see the volume come up. You notice, how we're consolidating, and notice how the volume is declining here. When this breaks out, we should see increased volume. So we should see, volume also break out of this little downtrend here that it's been in. And this could be a really good move. I'm just going to extend. There's a trend line I'd drawn a while ago. I can hear. And that kind of, I mean, where this is all sitting right now, it's saying, hey, I'm either going to go or I'm not. I'm either going up or I'm going down. And it's a big move either way, right? I think if this does come to the downside, then you're probably looking around the 50-day moving average or the 100-day moving average here. So somewhere in this 55 area would be a downside target, and then upside, upside target could be really, starting at 90. So this could make quite a move to the upside. So there you go. That's Celsius. Anybody else have any tickers they'd like to look at? If you guys don't have any tickers you want to look at, that's cool. We can cut this session short.
I have one. Well, I follow semiconductor some, so we've got NVIDIA.
Okay, I'm having trouble here. I'll just actually let me turn my volume up. It's having a little trouble hearing you. I kind of caught semiconductors.
Yeah, NVIDIA.
Oh,
NVIDIA.
okay. All right. So it kind of, I mean, this kind of looks, this is sort of a messy bull flag, but it also sort of looked like it's starting to roll over, right? Down today, obviously, but not as bad as a lot of things were down today. And you know, there is definitely some support here. I'm going to mark this support, and I'm going to throw some new markups. Obviously, haven't looked at this one in a while, so we'll draw some new lines on the chart. That support like comes right back from there. This in. So yeah, I mean, it had broken the short-term downtrend. I mean, that had broken nicely. It moved up, and you know, got up through the resistance area, and you know, put a little base in there, much like the market, right? You know, it puts sort of the base on the base in that we really like to see, but was unable to break out the top of that. So that's what we really need to see. We really need to see us come out of this little range to the upside. And I think if we do, we could have a nice strong move, probably up into this 230 area. But, you know, if we have a bad day tomorrow, we're probably coming down to the bottom of this range, you know, in the area of around 160. So everything's kind of like, everything's sort of binary right now. You know, we're set up for big moves one way or the other. And it really all depends on that data point tomorrow. But if we're looking at NVIDIA, we should probably look at the semiconductor space overall. Yeah. And you can see that it looks somewhat similar, messier. And the move down today was a much bigger move down in the semiconductor space and in NVIDIA. So, you know, NVIDIA is kind of outperforming, right? Or it was at least outperforming today. And I think the relative performance, just looking, you know, looking at the two charts here, I think we've got pretty decent relative performance on these. Let's bring this up. Yeah, SMH. So on the top chart, I've got NVIDIA. In the, in the middle chart, I've got the semiconductor ETF. So we can compare these, you know, together. And then what I'm going to do is I'm going to divide NVIDIA by semiconductors, so we can get a direct comparison here. I guess so. Yeah, I guess NVIDIA was actually underperforming the semiconductor space, and is now that, you know, that relative performance is flattened out, and it definitely, you know, outperformed today a little bit. So yeah, this doesn't really tell us a whole bunch, except that, you know, it's down at the lower end of its relationship. So when you kind of get stretched down here, to the lower end of the relationship, you kind of usually expect it to move up. So that suggests that NVIDIA should move up and outperform semiconductors. And that's sort of what I'm seeing on these charts when I look at these charts. So let's go back to NVIDIA. So yeah, you know, let's have a nice bounce from here. And you know, this can get some legs and you know, take a step up, move up a level, right? You know, bounce out of here, move up in, and start, you know, consolidating up in this area here. But I think that you know, if bad stuff starts to happen, I think this 160-ish area, 158, 160 should probably hold. It looks like a pretty decent level, and people have got to be seeing value in NVIDIA down in this level. All right, any others?
Can we take a look at TDD, the trade desk?
Okay, sure. That for Ken?
Yep, thanks.
Okay. All right. Huh. Well, it didn't do exactly what I was expecting back then. Oh yeah, okay. Marked that bear flag in there before. It's weird. This is weird price action. I don't know what to make of this. So we had earnings. Okay, so yeah, you can expect weird stuff from earnings, but what is this? And it's like it's totally like it's almost like a mirror image of itself, right?
Yeah.
It's like completely repeating. So weird. So obviously, you know, I mean, we've got a bull flag, right?
Mm-hmm.
And we had a bull flag before as well. And before it broke out the bottom of the bull flag. I mean, gap down really hard. Found this support level, this $40 support level from way back in the past. I'm not sure how far back. Yeah, it goes way back too, eh? Yeah, back to like just post COVID. Bounced there nicely. And then, yeah, it broke down and just came right back down to there. And now it's moved up again and is drawing almost identical bull flag. You know, this didn't have a terrible day today. It's down what? It was down, oh, actually, well, 4%, but I'm sure the beta on this thing is really high. What's the beta on this guy? Oh yeah, the beta is like 2.15. So do you know what I mean when I'm talking about beta? I'll just explain it for the recording anyway. So beta is like a measure of how much does this stock move in relation to the market. So for instance, you know, the S&P 500 has a beta of one because, you know, that's the market, right?
Right.
And so this has a beta of 2.1. So for every 1% we see the S&P 500 move, this should move 2.1%.
A multiplier, basically, yeah.
So it's basically twice as volatile as the market.
So it's pretty much a multiplier, right?
Yes, yeah. And so yeah, so today we saw the S&P 500 down 2.36%, and TTD is down 4%. So it didn't even make sort of the beta move. So in a way, that's kind of outperformance, right?
Mm.
You would have expected to see this go down almost 5%, and it only went down 4%. You know, that's somewhat bullish. And it's still within this consolidation, which is really nice, and right in the middle of it too, and hanging right on top of the 21-day moving average. So that's good as well.
Yeah.
So
I'm actually looking for an entry point on this one.
then so what's going to happen is tomorrow it's either going to gap up or gap down, right? It's going to go with the market.
Right.
So if the market goes up tomorrow, I would just jump in this as soon as you can, because it will break out of this consolidation.
Right.
And I mean, this is kind of what you're waiting for, right? Or what I would be waiting for is a breakout of this consolidation. Because, you know, it should move up another level, probably comes up to 70 fairly quickly, maybe 65.
Mm-hmm.
But there's not a ton of resistance until you get into that 65 or 70 area. I think what was that, 75? Like, yeah, I'm not too concerned about the 65 actually. I think the 70 and 75 will be stronger resistance. But yeah, it should make a fairly strong move, or at least that's what technical analysis is telling us, right? You know, the bull flag, you know, when it breaks out of that, should take it. Yeah, see, look at that. See that measures right out to like 75 on the nose. is the move we would expect on a breakout of this bull flag. If it doesn't break out to the upside, it looks like it would probably come down and test these lows again, or best case scenario, if you're bullish, best case scenario would be test this trend line. And this is a really solid trend line. This trend line goes back to the beginning of this thing back in 2016, right? Mm-hmm. You do not want to see that trend line break, and I don't think it will. I think there's enough support in here between the trend line and this double bottom here. I think it's got lots of support, and I think it's hanging in fairly well. I would just check for news on this. When was either on May 23rd, like after hours, or the 24th pre-market. Something must have happened here.
Yeah.
But they bought it quickly, right? I mean, it went down a ton, and they bought it right back. So that's bullish as well. So I think if
I think it had to do with Snap.
Yeah.
That's the day when the news came out regarding Snap, how they were missing.
Right, yeah, Snap lowered their guidance and everything.
Right, and it affected trade desk as well because
that's right.
Advertising, tech ad. Mm-hmm.
Yeah, that makes sense. That totally makes sense.
That was why. So
it
wasn't really, particularly related to trade desk, but yeah.
Yeah. Okay. Yeah, and I guess that that is ahead. If you're bearish on, like, if you think a recession's coming and everything, and everybody's going to be cutting back, businesses do cut back on advertising.
Yeah, they do.
They shouldn't. It should probably be the last thing you cut back on in a recession, right? Mm-hmm. Seems to me you should be advertising more than ever when times are tough. But that's not usually the way. That's not usually the way it works. So you got to be careful that this gets sentiment, takes a sentiment hit.
Sounds good. Okay, thanks, Kevin.
You're welcome.
Yeah.
All right. Anything else?
Just a quick macro question, I guess. We don't need to look at charts or anything. Do you personally anticipate like a more bullish second half of the year?
I do. And I hope I'm not being overly optimistic, because I do try to be a fairly optimistic person. But yeah, I think there's a chance we have a rough summer. But I also want to believe that the bottom is in. Mm-hmm. But the one thing that sort of has me being bullish for late in the year is the midterm elections in the U.S. on November, usually around November 4th or 8th or something like that, right? Mm-hmm. I don't remember the exact date off the top of my head, but the beginning of November.
Yeah, it's November 6th this year. Actually, let's see. Yeah, sometime in November. Mm-hmm.
So, so first of all, you usually have like uncertainty and everything for many months before elections, right? And that's kind of where we are now, right? People are sort of thinking, oh, the elections are coming, but it's far enough away. This is sort of in the back of their head, right? And it is a little bit of a negative hit to sentiment. But the reason I'm bullish about the election and the outcome of the election and then post-election is that seasonally markets do really, really well. Markets are at their best. You have your best bull markets, you have your best rallies when there is a Democratic president, a Republican House, and a Republican Senate. And I don't want to get all political or anything like that, but I really don't follow politics, but you can't help it. I mean, because obviously I'm plugged into financial news, right? And so I absorb some of this stuff, and it sure looks like the Democrats are going to lose their control of the House and the Senate. And so that is a situation with the division of power that the market really likes. Because if you can go back well over 100 years, I think 150 years, and look at instances where it's been that Democratic president and a Republican House and Senate, and there has been really strong bull rallies, bull markets, in that situation. Now, I guess the Democrats could pull a rabbit out of the hat and hang on to both the House and the Senate, I suppose. And market probably wouldn't like that much. I don't think that, the market doesn't seem to like the Democrats a whole lot. So another reason why I think that, could be bullish if we see some Republican gains in that election. I think it will be bullish for the market. And if you look back even to the presidential elections, the last couple of presidential elections, the day after the election, the market has rallied and rallied strongly.
Right.
There's something to look forward to later in the year.
Yeah.
But it may even start sooner than that, because if it starts becoming obvious as we get closer to the election, if it starts becoming obvious that the Democrats will lose the control of Congress, traders will start to front run it, because everybody knows. I mean, it's not hard to go and find this seasonal, right? Everybody knows that that split government, a government that is kind of like deadlocked, right? They can't do anything. Everybody knows that the market likes that. So,
Got it. Thanks, Kevin.
Yeah, you're welcome. There's one last thing. I mean, the flip side of that is that if we do descend into a recession quickly, everybody seems to be expecting a recession, which can be a self-fulfilling prophecy. But I mean, generally recessions aren't that bad. They tend to last anywhere from 6 to 18 months, right? I mean, so maybe it's a quick one. It's in and out. Maybe it doesn't happen at all. But everybody is acting right now like we are already in a recession, and the market is acting like we're already in a recession. So any sort of improvement, improvement in inflation, declining inflation, but the economy still keeps rolling along, that's got to be good for the market. I think that's about all I've got to say on the macro for now. Is there anything else? I see Chelan has joined us. So Chelan, if you have any tickers you'd like to see, go ahead and let us know. You can either unmute and talk to us, or you can type it into the chat.
Yeah. Hey, thanks for just kind of listening today. Would like to get a little of your analysis on like Apple and that upcoming split on Google that's coming up in July. How does that usually
work? Okay. Okay, so let's take a look at Apple. See what we got going on. All right, so Apple's sort of got a bit of a bull flag going on here, but ugly day today, right? And I'm not a giant fan of this bull flag. It's pretty wide, kind of, a little messy. But it is a bull flag nonetheless, and bull flag you expect to see break out to the upside. We put in a series of lows right here, and that should be, and just below this pivot low that goes back to October of last year. So this area should hold quite strongly. In fact, I'm going to get rid of this one. We're just going to move this down just a little bit, kind of like that. So there's a really good area of support here. If you probably weren't here earlier when we were talking about the SPY in the market and everything. And we were talking about how the CPI number tomorrow is a real binary event. So either everything goes up or everything goes down. And Apple's no different, right? If inflation comes in hot tomorrow, Apple's going to come down, probably come down and test this level. Could poke through it, you know, like it did before, and then pop back up into it. You know, I think that level is going to hold. If it doesn't, you know, we probably do need to start marking in some other levels. And there's a level right there. So let's get that one in. That one right there. Yeah, so 128 area, and then probably 120 as well. So, you know, there's a fair, if it starts breaking down, there's a fair bit of support here between 128 and 120. So I wouldn't really see it. I wouldn't expect this to go any farther than 120. I'm surprised it was as weak as it is today. But you know, I mean, there's a lot of fear in the market today, and people obviously did not want to hold through this report tomorrow. So,
Yeah. Thank you, man. Yeah, I know. Also on that note, like, you know, there's a lot of upcoming binary events with the FOMAC, you know, next Wednesday, and then there's, I think, another thing towards the end of the month in June. I wanted to kind of get your sentiment or thoughts on that. With you know, if the GDP number comes down again, and let's say if you're too negative, then you know you're officially in that recession boat. You know, and people kind of already feeling that now. So just wanted to get your thoughts on how that wave is going to look for us. You know, over the next couple.
Sure. So yeah, I mean, like you said, we've got FOMC on Wednesday of next week. So again, another real binary event. And the sort of the CPI and FOMC are sort of related events, right? The FOMC is, in a way, CPI is almost more random. Because the Fed is so good at telling us what they intend to do. We know they're gonna raise by 0.5 point next Wednesday. What we don't know is, you know, just how what is their outlook on the economy going forward and all of that, and we'll get to find that out. So that's next Wednesday, and then on Friday we have quad witching. When all the, you know, monthly options expire and the monthly future contracts expire, so that, you know, that's brings in a lot of volatility. There is a lot of talk about potential gamma squeezes in the options market, or bringing that into the equities market, because there is an awful lot of puts still out there on the market that will be expiring next Friday. So that could be really interesting, and that, to me, I mean, that has the potential to cause a rally. But you know, we'll have to see. And I'm gonna do some more research on that over the weekend, and just see how big this put position is that's sitting in the market that's expiring next Friday, because that could move the market around. So that's the rest of the big stuff for this month. And yeah, you know, the next time we get to look at GDP, you know, I mean, GDP pulled back the last time. So if it pulls back again, you have to have 2 quarters of negative GDP, then you know you're in a recession. So if it pulls back again, we know we're in a recession, but we need a little more time yet before we know for sure. So we just kind of got to wait it out, right? And we're coming into summer too, and things definitely slow down in summer in the market. The market can get a lot more volatile because there's less volume. There's less trading being done, and when big news hits the market, there isn't as much volume and liquidity there to absorb all the either buying or selling. So you can get these outsized moves on these events. So hopefully that sort of gives you an idea of sort of the macro things that we're looking for, you know, moving forward. Oh, and you mentioned Google as well. So Google split. Oops. Do you know the date of the split?
Sometime in July, first week of July, I think. Sorry, yeah, I'm not sure.
It's July 15th.
It is okay. So about a month away, or well, 5 weeks, I guess. Right? What's the date today? The 9th. Yeah, I don't know what to think about this, but sometimes splits. Well, I mean, okay, let's look at Amazon. Similar company just had a split, right? And what have they done since the split? Their split was on Monday, wasn't it?
Yeah, just
There.
a couple of days ago, it started going down. Yeah, big time.
Yeah, the split was on Monday. So when it opened on Monday, it had split. It basically splits in the over the weekend essentially, right? So what happens? It gapped up, it went up, and it pulled right back, and it's been kind of pulling back ever since. So there was a time, anytime, like for instance, when Tesla announced a split, where it would just skyrocket, right? And then a bunch of other companies started announcing splits, and they had much smaller moves, and now splits, nobody really cares right now. People are more concerned about other events in the market other than these splits. So the Google split will probably be a non-event. I would say with the Google split, if you get a gap up and it starts running, especially when it runs into resistance like you have here at Amazon. I mean, you had this big gap here. I want to actually draw that in case we look at this again anytime soon. It ran up almost to that gap and then got sold off. I mean, that's kind of a no-brainer. Traders are definitely going to sell it there. And I could see a similar kind of price action happening on Google when they split. In fact, that's something I'll watch for. If Google, so we'll go back to Google. So let's say Google was to split tomorrow. I mean, clearly we have some resistance here and around the 2400 level, and with this 50-day moving average, if it gapped up and ran up to 2400, there's going to be, there would be a lot of sellers right there at 2400, and it's probably going to pull back. And then the question you got to ask yourself is, does it keep pulling back after that? Was that sort of, was that it for it, right? Now, obviously, Google's not splitting tomorrow. We're gonna, it's going to be somewhere else. Hopefully, it'll be up here around 2,500 when it splits, if not higher. But we'll see, right? But we definitely want to watch when the split does happen. If you're playing it, watch out for resistance overhead and see how price reacts to that resistance. If they start selling it right away, then you want to be in there selling it too. Does that make sense?
Yeah, that was good stuff, man. And then, do you follow oil or energy, or these other agricultural like wheat and corn? You play, yeah.
Oh yeah, I've been big in energy for quite a while now, and I've been telling everybody to whoops, that's gold. I've been telling everybody to get themselves energy positions for quite a while. I mean, I started with some small energy positions, way back in here, beginning in this area right in here. There might have actually been one I've started back over here. One small company that's one of the best trades I've got on right now. It's up 600% from when I entered it about a year and a half ago. So anyway, yeah, I'm really like the energy space. I'm getting a little concerned that it's been running for quite a while now, and everybody's in it. So who's left to get in it, right? If you're not in energy, why the hell aren't you? And are you going to get in now? So the one thing that we need to see the energy space in general keep running up, oil needs to keep going up. There needs to be continued supply chain issues, or not supply chain issues, but production issues. You know, OPEC, I think, is pumping as much oil as they can. I don't think they can pump anymore, right? I think they probably would if they could. So we're gonna see, I think, continued low supply, and that should continue to increase the price of oil. So the whole space will go up. So I'm showing the chart of oil right now. We should look at XLE is, you know, sort of the energy industry companies, and this is, you know, this is doing even better than oil. Although this trend is starting to get steep, and we can see that we just broke below it today. So I'm not surprised that we've got a red candle in energy today. I don't think it's got anything to do with energy itself. I think it's got everything to do with, you know, CPI tomorrow and just the way the market was. They were selling everything today. You know, it didn't matter what it was, how much they had liked it. They were selling it today. So not surprising that energy was coming down too. But, you know, if you look at any of the ETFs in the space, are all looking really strong. I mean, look at this thing. This is the oil and gas producers, the oil and gas services. This is also looking really strong, not quite as strong as the producers. If we look at Occidental Petroleum, this is Buffett's favorite company. That's an ugly candle on this one today, because you would have expected that little tight consolidation. I mean, that would have been nice if that had broken out to the upside. But there should be fairly strong support in this area, you know, between where it is here now and this 50-day moving average. We should be seeing a fair bit of support. ExxonMobil is, you know, one that has run a ton. This, you know, ExxonMobil is just so strong. I'm in this one, and it had a terrible day today. But it's volatile like that. And you can see that, you know, when it's had big down days, they've come and they've bought it up. Now, they didn't come and buy it up today. Doesn't surprise me too much because of the way the market was. But this is an interesting one, this DMLP. But you got to be able to handle some volatility if you want to be in that one. This WES, Western Midstream, that's one I kind of like. I don't have a position in this. I sort of found it a little late after this breakout here. I think it was after the breakout. But you go back, if you go back and watch some of the weekend videos I've done, I've been talking a lot about the energy space and about individual companies and pointing, you know, plays like this out. So this one, you know, if you miss it, you got to kind of wait for a pullback, and probably pulls back to the 21-day moving average and then goes again, or shouldn't pull back any further than the 21-day moving average anyway. This had an interesting day today, didn't it? I mean, this did not fall apart like the rest of the space did. So yeah, it could be something here. What else? Yeah, that's about it. I think that's about all I've got for the energy space. But yeah, I still think it's you've got to have some investment in this space right now, but you also have to be really careful, because once it starts to roll over, it'll probably roll over really fast. So you've got to be really nimble and you know, don't get caught holding the bag. But definitely try and find a way to get in. You know, on these pullbacks, especially when we get little pullbacks. That's your way in.
Cool.
All right. I think I'm kind of right. I think I'm kind of running out of steam here. So I think, unless anybody has any last tickers, I think we're going to pack it in. We'll be doing this again in a week. Yeah, so a week from today, I'll be doing another ticker talk. And on the weekend, of course, I'll be doing a weekend briefing video. And yeah, I can do one more on Tesla, sure. And what was I gonna say? Oh, Nick is on vacation right now, I believe, and coming back shortly. and he should get some sessions marked up in the calendar shortly as well. But we will go back to the charts and take a look at Tesla. There we go. I this week, early in the week, decided I'd had enough of Elon's crap, and I had a Tesla swing trade on that I closed out of, and I also closed out of my Tesla long-term investment, because I think that Elon is such an amazing guy, such a brilliant guy. He's probably the smartest engineer in the world. He really needs to stick to what he knows, should really stay in his lane, because he could do so much good if he would just stay in his lane. And I'm just kind of sick of his antics and the way his antics affect the price of Tesla, and how his antics are going to affect the price of the SpaceX if it ever goes. Well, SpaceX will never go public. They'll spin out the they'll spin out the internet service, Starlink, and take that public, and his antics are going to affect that as well. So yeah, I just don't. I've got some index ETFs and everything, and I basically, if you own an ETF, chances are it's got some Tesla in it. So I'm getting my investment in Tesla that way, and that's a much better way for me to deal with it without having the frustration of actually owning Tesla directly and having to put up with all of Elon's BS. So there's my little rant on Elon and Tesla. But I really love the company. I really like the guy. I mean, I have a ton of respect for the guy. I just think that he's out to lunch sometimes, which is a shame. He should just stick to what he knows.
That's so true.
So Tesla, the stock, the chart. I mean, it's had quite a pullback. I was surprised to see it go below 700, and I was surprised when it poked below 650. And I thought, wow, if it ever gets down to 600, I'm going to load the boat. That's still when I was a bit of a Tesla fan, or I am a Tesla fan, but it bounced really strongly. It started putting in a nice little bull flag here, and it started getting messy. So I think this needs to just go sideways for a bit. I think that, like I've said, Elon needs to chill out. I think that people are nervous. I'm not the only one who feels this way. And you can see sentiment starting to change. You can see it in the media. You can see the media sort of testing the waters with negative stories about him, right? And you know what the media is like when they build somebody up, and when they decide to tear him down, they really tear him down. And they're testing those waters. So that's a little scary as well. So I think everybody needs to chill. This stock needs to go sideways, and then it can start moving up and taking back some of these levels. I really don't think it goes much lower than this, but I don't see it unless they really start attacking Elon and he really starts doing stupid stuff. Then I could easily see it down to 550 and maybe even lower than that. It's all dependent on sentiment right now, and that sentiment, it all rests on Elon's shoulders. How is he going to affect sentiment for his company? Yeah, I think that's all I got for you. I think, like I said, the best thing for this stock is to go sideways for a bit. Let everything chill out. All right, that's it. That is it for me today. Thanks for coming out, guys, and hope to. Yeah, thanks, Ken. I mean, I'm feeling so much better than I was on the weekend. Man, I felt terrible on the weekend. But yeah, so much better now, but it's still kind of just lingering a bit. But I appreciate your sentiments there, Ken. Yeah, you're welcome, Shalane. And Abby, you're welcome. So yeah, enjoy the rest of your evening, guys, and we'll see you in the Discord, and hopefully see you next Thursday.